Hello, friends. Welcome to Nirmal. I'm Piyush Jain, and today we are going to talk about the markets. Over the last 1 month, we actually have seen a lot of developments happening in the global markets. Uh, 1 month before, we actually were seeing corrections, mild corrections in the Indian markets. There actually was volatility in the European markets. US markets also again seeing some issues. Over the last 1 month or 2 months, we have seen some recovery. So now, actually, before the result season, the question really should be asked is: are we out of the woods? Have we seen the correction? Um, what is happening on the macros? Are interest rate now not going to rise? Is that something which is a good news for a couple of sectors, auto, reality? There are so many questions which we need to answer. We are starting and we are looking in April. First set of results are going to come. FY24. Are we looking for a better first half, or there could be a sort of a softness? And To get a sense around all of these questions, let me now welcome our market expert, Mr. Andrew Holland, CEO of Avendus Capital Public Markets Alternate Strategies LLP. Andrew, as always, welcome to the show.
Thank you, Piyush. Thank you for the opportunity to speak with you.
So, Andrew, last time we discussed, and coincidentally at that time, market was showing volatility, and there were a lot of events happening. And I definitely remember you actually were saying that you are not from the camp where you believe that continuous interest rate increase from Fed is going to happen. So something is going to give way, and finally, actually, we are going to see that Fed is going to realize that now basically the interest rate increase should stop, and maybe interest rate decrease should start. So my first question to you would be: we have seen a couple of banks going under in US. We have seen what happened with Credit Suisse. So now, how the macro scenario has changed?
So, the markets have tried to play the positive on this in terms of that, going forward. In fact, you've seen it in the bond yields, right? I mean, prior to this banking problem in the US, 2-year bond yields had got to near to 5%. And when that crisis started, then obviously they dropped below 4%, which is where they are today. So the market's saying that, enough is enough, and the Fed will have to go on hold. Now, we've always said that, there's two factors that would bring him onto hold. One would be either, unintended consequences, which we see play out now. And I still think everyone's still looking around the corner to think who might be next, because, it's not as though that interest rates have come down. They're still, they're still there. Or secondly, the downturn would be so swift, heading towards recession, that he'd go on hold. Now, the first has played out more quickly, and so the market's saying that, if he goes any more, then there's going to be more unintended consequences, which maybe, will continue, the markets will not like. So I think that's where the market is thinking at the moment. We've always been of the view that one of these two things would happen, so therefore he will go in hold. We do think he'll go in hold now. And if you listen to his last statement, which is quite confusing, because he said that, on the one hand, that, with all this, interest rate and the disruption in the banking industry, that would, tighten credit. So do part of its job for him in terms of not having to raise rates. But on the other hand, inflation was still sticky, therefore he might still have to do, more kind of tightening. So I think the words that I would probably think about concentrating on is that he said previously that there's going to be pain in the economy, but we have to tackle inflation. So, maybe they're just ready with, more kind of series of supporting, or probably the banking industry if he continues to tighten. But I don't think he will. I think we're going to go on hold. I saw Australia go on hold yesterday, but there again, New Zealand went with a 50 basis increase. So I think all that lends to, Piyush, is the continued volatility. We're all going to be looking at data. We're going to all be looking at, what we think will happen. And then OPEC comes in and says, we're going to cut output. So, that increases the oil price, which can't be helpful when you're tackling inflation. So there's very, very varied kind of struggles in terms of, what the market is digesting to try and make sense of where we'll be. But I think the overwhelming view is that the Fed will go on hold.
So if the Fed goes on hold, then should we be actually prudent enough to think that perhaps RBI could also go on hold?
Yeah, I'm thinking that the RBI might just do that extra 25 with a dovish statement. I think they should go on hold, but they're probably seeing that whilst inflation is coming down, it's not quick enough for them to kind of maybe not follow the Fed from the last rate hike, which they've been doing quite well all the way through. So. Maybe they won't just go against the trend now, but have a more dovish outlook going forward.
What goes in the mind of the bankers at RBI or the policymakers at RBI, what I should say? System growth, trade growth, 15% plus minus 1%. We are seeing continuously fortnightly data. We are seeing robust auto numbers. We actually are seeing robust GST, robust tax. Then we see commodity inflation, which is external inflation, crude oil, edible oils. Largely, again, basically, you are seeing those as all global traded commodities. That is commodity-induced inflation, which is coming in. And then you actually take a look at these robust sort of numbers, which I just highlighted. And then actually you go and see the Fed, which perhaps could go on hold, as you're saying. And then you come back to the RBI seat. And then actually, what actually they would be thinking? Should they be actually really worrying too much about the inflation which is coming from outside, or they should actually really think about protecting the growth which is strong right now, but could get hurt if the interest rates continue to go up?
So I could actually fully agree with what you just said. So with the RBI, I think part of it obviously has been to stabilize the currency as well. I mean, you don't want to be kind of going against a trend. We see what's happened to other currencies when they've kept rates low or even decreased them. So I think stability of the currency has been a part to play. But of course, our inflation is linked to food as well. So that's something that we do have some control, some control, and of course there's talk of El Nino and so forth. So I think that's probably why they'll be continue to remain a little bit cautious. But I fully agree, which is why I said I don't think they should increase rates, because I think the economy is at that kind of point where you could start to see, or we're starting to see, a little bit of a slowdown in some industries. So to keep that momentum going, I would like to see them go on hold, but as I said, there's many other factors which they look at, and I think globally it might not be the path that they want to follow at the moment, and maybe just one more hike from them as well, just to kind of keep differentials for the currency in particular in play, and that would probably be it. But I'm still hoping that they'll say they'll be on hold.
I have three associate questions here. One, basically, since you talk to so many foreign investors, on a currency perspective, in such a turbulent scenario, if I want to use a softer word, slightly uncertain scenario, are foreign investors also looking at a risk from a currency depreciation perspective, or we have already seen the worst of currency depreciation?
No, I don't think it's about currency depreciation. I mean, I think that happens when you have some kind of big risk globally, where there could be either a balance of payments problem or the current account deficit kind of ballooning, and that hasn't been the case, to be fair. I mean, it's not as good as it was, but it's not within the realms of the kind of problems that we've seen in the past. So I don't think that's been the kind of reason why FIIs have been selling. I think the reason FIIs have been selling has been twofold. One is they massively outperformed by holding Indian equities in the previous year. So they did very well relative against all emerging markets and developed markets if they did that kind of valuation. So a lot of the monies which have come into emerging markets have been finding its way into the Koreas and Taiwans and maybe China's as it's kind of moved away from some of its problems. And of course, our valuations were relatively very high. Now we come back towards the mean, so it's becoming a little bit more constructive to think about India. But when you think about the next stage of what's going to happen, it's going to be, yes, there could be a recession, but when you come out of a recession or when the Fed goes on hold, you've got to look for growth somewhere, and it's going to be emerging markets. So whilst India stands out because of its growth, there's cheaper markets elsewhere, which would be the first beneficiaries of an export-led recovery going forward rather than India. So I think India for the first half, and let's talk about either calendar year or it could be to September. I think we're going to struggle to get FII flows because I think there's other competing markets which will probably get that money. Doesn't mean we won't get some if you get money into an emerging market fund, but we might kind of get equal to underweight kind of monies being put towards India. But the second half of the year is when I see the momentum of growth coming from what the government's spending, from what we're seeing from foreign direct investment, and basically the kind of the kind of manufacturing is really starting to kind of do well. So that will all lend itself to more private capex going forward. So that's when I can see earnings growth starting to pick up. And we saw some of the the banking figures showing that obviously the consumer is still alive and kicking and borrowing money. So that's the good news. So I think that will accelerate in the second half of 24 calendar kind of fiscal year.
That's interesting, and then I'll straight away jump into other sectors also. I was actually seeing the sort of a performance there, and what I was realizing was that a month back there was an interest rate shock, and we saw sell-off in the real estate stocks. We saw sell-off in the auto stock, a bit of correction. We saw average performance sort of from the banking stocks. Now we are seeing some recovery out of banking, which I know is your favorite, or I would say that you like it. Auto, real estate, from an interest rate sensitive subject, which are the ones you think actually are very nicely placed at present?
So listen, longer term, I still like the banking sector. I mean, it's a place you have to be. So we'll stick to the kind of normal private banks there. In the past we talked, Piyush, when PSU banks rise, it's more of let's rent them rather than buy them for long term. So that's more of a trading view. So I'm still keen on the banks, but I think prior to this kind of banking crisis in the US, they were getting a bit toppy. So these have been good levels to kind of nip away again at them. In real estate, I mean, again, I'm seeing all the figures coming out, which are still showing strong demand for housing. So I don't think that's going to go away. And I think it's a combination of two things. One, people, with that affordable housing, which we don't see and we don't think about so much, people moving up the ladder as well. So I think there's a lot of that happening. And of course, there's many industries which are doing well. So therefore, they can, the people who work there can now start affording some of these, the housing. But I'm still surprised at some of the prices that people pay in Mumbai, to be honest. So that's that. Now, in terms of consumer spending, I'm kind of leaning more towards the kind of beverage industry. I'm not taking away autos as a whole. I think it's a little bit more defensive because I'm not sure that we're done with unintended consequences yet. So I'm not sure autos is where I want to be in the very short term. There could be some trading, strategies to play there. But it depends on, you're taking a view of four-wheelers versus two-wheelers. With two-wheelers, who's doing the best and product lines and EVs and so forth and so on. Whereas on beverage, I think those companies will continue to see strong growth. Now valuations are, high, but I think it's justified because I think there's been a lot of problems for the industry, and I think they're starting to come through them. There's always a pressure on margins. It's the same for FMCG as well. But I think over the kind of medium to long term, I think they'll get through this. And I think we've all seen, people moving, younger people anyway, experimenting in different parts of the spirits and wine industry. So I think that will continue with a young generation, right? So I think the long-term prospects remain very, very strong.
Right. So when you say beverages, it is largely liquor, or is there any other subset also which you identified?
No, I'm thinking mainly liquor, actually, in terms of the growth there. To be honest, you could kind of think about fast food as well within that kind of consumer spending. I think that's something that will continue to increase. But again, it's there's I'm finding that different companies have their own kind of set of either prospects or disappointment. So, but I think with the beverage industry, it's a straightforward growth. So I'm quite happy to be involved there.
Right. Okay. And since we're in the middle of the IPL season, you are a sports lover. I know so much. Different kind of sports also, but let's talk about the IPL here. From the IPL perspective, it is also a season where you talk about the ad growth, you talk about the digital sort of media, the telecom stocks also, who actually are going to benefit. This is a short-term view, but on a larger long-term view, on a strategy perspective, how is the telecom sector looking to you?
It's always. It really depends on if they want to take advantage of being just two main players, whether they want to compete with themselves or whether they want to start taking more profitability from it. So if there's no price wars, which doesn't seem to be right at this moment, I think that again the prospects look good, but it's more defensive. I don't see that there's such a big growth coming from there. So I think there's other areas of the market or themes in the market which I'd like to play rather than just pure telecom, because it's not. I mean, the revenues and profits aren't going to double overnight. So it's going to be a slow, steady, kind of earnings growth, which is fine. I'm nothing wrong with it, but it's kind of where you hide. It's not, when markets pick up, you're going to find that those are going to be relative outperformers.
Right. And from that perspective, basically, when I go to the other consumption basket, and that could be durables, or that could be from the perspective of construction suppliers, I was looking at a couple of stocks right now. I'm taking names of stocks, but you can talk about sectors. For example, I was looking at Apar Industries ventured right at present into electric cables, and their entire electric cabling or construction supply basket is doing really well. I basically started seeing. I actually took a look at from the perspective of pure consumption ancillaries, and they actually also are doing well. So, from the perspective of ancillaries, whether it is consumption or construction ancillaries, is there anything where, from a sector per se, you really like?
So if I think of consumption, I mean, listen, what you've said is also linked to kind of construction and real estate, right? So I mean, that's...
Yes. So the names I took, one basket was everything which is catering to construction, from your wiring to everything.
No, I agree. So I think those are plays. If I talk about themes, and I'll bring in the consumption part again. See, I think there's 3 or 4 themes that to be played out in India. One, we talked about the banking sector. That's an ongoing theme. Beverage is another theme, or liquor is another theme. And I think the other 3 themes are, one is, it's a global theme, defense and renewables. We know there's going to be investment, and we've seen a lot of orders by the government over the last few days in terms of defense contracts. So that's not going to go away from us. So it might be lumpy, and that's a part of the problem. And it's obviously, you never know when these contracts are going to be awarded. But we know defense is going to be a big play, along with renewables and the infrastructure that goes around it. And then there's obviously that part of the capex cycle, right? I mean, apart from the government roads, bridges, and elsewhere, there's going to be all of these new, I want to say manufacturing areas, which India is going to be seen as a a place to diversify away from China, or other places, or India can see an opportunity to start supplying itself like semiconductors, and then export going forward. So electronics is a theme. It's difficult to play out, but so that's one theme that you could play. On the capex cycle, it's not going to be. It's going to be more of those smart cities, smart manufacturing hubs, smart something. So it goes back to your wiring, but is it ABBs or Siemens, or is it L&Ts and BHELs, right? I think it's more the ABB Siemens. So whether these companies kind of work on the wiring or anything else, that's a subset of that capex cycle. And I think the final theme is really, again, it's consumption. It's more about travel, hotels, where I'm sure you're finding and I'm finding it's very difficult to get hotel rooms and flights without paying as a cost which you think is far too high than it should be.
Absolutely. Coming back to beverages, I wanted to ask you, in the beverages, what sort of earnings growth you're expecting this year? Is it something high teens, or what's your expectation?
Yeah, I think it's going to be, between that kind of between 10 and 15% is the kind of earnings growth I'm looking for, from the sector as a whole. But obviously there'll be individual companies which do better than that, because of, either launching new brands or, taking market share. So there's always that. You have to look into each of the different companies. But as an overall industry, I can see kind of top line growth of 20%. Let's say 15 to 20% to be conservative. There might be some margin contraction because obviously there's still the input prices have been a problem. But thereafter, that kind of growth, if their input prices, start to kind of ease, then you would see, a disproportionate amount of that 20% going back to the bottom line. So that's the opportunity. So I think that's going to be the kind of the reason why people kind of, our investors will see this sector as not just being defensive, but with growth as well. So if I say the IT sector, I'd probably say that if I was thinking about both being defensive but with growth, I'd probably say beverage has more growth than IT in the next 1 year.
So then from that perspective, are you also playing on a valuation re-rating? Because earnings growth you have already said, but I'm just getting a sense that you are feeling that the valuations actually need to be re-rated.
Yeah, I think it might not. They've done quite well in terms of the beverage companies in terms of share prices. So you might get some consolidation before the next phase. But again, it's really that whole consumption of it. So if you go to a $5 trillion economy, people have more money, and they want to do something with it. Now you can say, okay, they'll do housing, cars, this and that, but the penetration levels are quite reasonably okay. Whereas I think, after COVID, I think experiences is something that people will look for more and more. That work-life balance is changed, completely. And I don't see it changing back so quickly either to pre-COVID levels. So I think we'll be looking to do more in India, because I think people have now become more comfortable with saying that actually there's a lot to do in India. If I speak to any of my foreign friends, they say, I didn't know you had all these palaces. I didn't know you had, you could get snow in the Himalayas and you can do this and do that. They don't need to go anywhere else. They just come to India now because they haven't traveled to some of the places and experienced India. And I think Indians are also finding that, right? To my view.
Yes, absolutely. And that's why in the last time we were discussing about travel and how actually everything is booming up in the travel sector. So as you just highlighted, I'm recapping here: defense, renewables, travel, other banks, private banks, and also beverage. These seem to be sort of a sweet spot right now. As we sum up everything on the markets and on the earnings for the last fourth quarter, what's your view overall? Any sector which you think can outperform overall sort of earnings? What's the view on that?
So if there's one sector which is, showing, continued acceleration or growth is accelerating, is the banking sector. So I think the positive surprises will come from there. I think negative surprises will probably come from IT in terms of guidance going ahead. I think probably the commodity companies will, because prices have fallen sharply, I think they will again have some margin pressure. But I think the surprises will be real estate, construction, these type of companies. I don't think so much for the autos, and so I think it's pretty much known about what the volumes are and everything. So I think that's already in the price. But it really, I would say that the forward-looking guidance, I think, will be a little bit muted for most sectors, apart from the ones I just mentioned.
Okay, Andrew. As always, it's always a pleasure getting all the insights on the markets and also overall the macro view.
Thank you, Piyush, and always thank you for the opportunity to be with you and Nirmal Bang.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.